Hi there. I'm going to explain the trade that I took in the morning session, which is nothing but London, New York trades. A couple of buy entries. First one failed, I end up losing 1% in every account, and in second entry, I secured almost 1.5 and 2% in some of the account, which is a really beautiful entry today. And today when I was in the market, price just in the mid-range. So I like to see either the yesterday high or low swept not to go for an entry. So I moved all the way back to 1 hour. So 1 hour, 4 hour. 4 hour I do have this fair value gap. This is the yesterday's low. Got it. This yesterday's low aligned with this 4 hour fair value gap. If I go to 1 hour, an order flow is completely bullish these days. And from March 6th itself, almost a month, price was totally consolidating. And then this is a last significant push to the upside. If you can, or you can see one thing here, like uh, price kind of shifting towards downside. You can clearly see this, right? So the last high getting swept gives structure shift to the downside. So the supports getting break here. The price keep on rejecting at this point, now getting broke through and displaced to the downside, and this area act as kind of resistance. uh, I just give a bias, not I'm not trading these days support and resistance. I am trading opposite to that, but I just explained. After the sweep, price break below this level, the rejection level, and come back and retrace, pull back to that point, keep on rejecting, pushing lower, and then this entire liquidity has been swept to the upside, and again internal getting swept, structure shift fair value keep on holding downside. So kind of the selling curve started. We might expect the price come to this area, which is daily fair value gap or weekly fair value gap. So price might expand to this point in this week or in following weeks. I don't know when, but nowadays price is completely consolidating. Got it. So this the reason for the buy model is price common approaches the fair value gaps. Already price give a good move inside the range and come back towards the yesterday's low. Got it? Align with these fair value gaps. So we just patiently wait till the low getting swept or getting displaced. So in 1 minute, I can explain the first entry. So exactly at this point, after taking this low, price sweep, give an initial displacement to the upside, breakout structure, and this fair value gap getting flipped to the upside. So I entered my first position. So getting swept this big structure shift inside this range. I put my first entry. What the reason for that entry is? Yesterday low getting swept, structure shift in 1 minute, hit at a fair value gap. This is the breaker area getting tapped, start to displace higher. So I put my first entry at this level. Like once the price getting broke higher, once it approaches this level, getting respected, I entered my first position here. Second position exactly at this fair value gap flip. So my second position is at this point. So this is my first position, this is my second position, but price stopped me out in this entry. And then it gives a real move to the upside. So around 9:53, 10 o'clock, there was a news today. So before that, I got stopped out. So that was not much reaction in the news, but after the news, there is a beautiful move to the upside after sweeping this low. This is just an initial. According to my perspective, I never trust this kind of sweeps. I like to see this low getting swept and then give a structure shift, then flip a fair value gap, then approaches this breaker. This is going to be the A plus 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 setup for me at least. I don't like to trust this kind of sweeps. This is not a good sweep at all. This is just the engineered liquidity, just manipulation. This is just a manipulation move. Invite the buyers, just text them out. I got manipulated and I entered and I got stopped out almost 1% lost in every account. That's a big loss. And once I identified the sweep, so after the news, this is the news candle, I guess. Yep, 10 o'clock. Once I see the sweep, we got the fair value gap getting flipped, but not hold. Supposed to hold. It should supposed to hold right if it get flipped. It get ran through, sweep the low, start displacing to the upside, give a structure shift, close above this high, beautifully created a fair value gap, respected, give good push to the upside. Got it right. So if I draw on my standard deviation, so lost manipulation low to the structure shift point, right? Structure shift point. So what is going to be my target for today's? No, this is not the case, bro. I did it wrong. Yep, this is the one. Uh, yep, zero. Sorry, 0 to 1. If I put this, so this is going to be my day target, right? So according to this perspective, I entered my positions here, targeting the targeting this point, exactly this point, and kept my stop at the swing lows in this at this area. So Onisha 2.424 is going to be my target. Beautiful entry. Everything went so good. My target is going to be the equal lows, so the equal highs. This point. I targeted this point. Now inside that 2 to 2.5. And my final target going to be this high. Yesterday's high, I guess. So this was the entry that I took afterwards. In 5 minutes, you can clearly see that this is not a sweep. This is just a push towards the fair value gap, getting respected, push towards the downside. Now the internal getting swept. Now the real structure shift. The candles close above the swing high. Swing high got displaced. Uh, leave these fair value gaps and this fair value gap aligned with this breaker point. Hold the price. I entered my first position exactly around this point. Once I asked my friend, he's entered. Once the low getting swept. Once I get this good bullish candle, I entered my position here. Kept the stop loss at this point. Once this fair value gap getting flipped, once this fair value gap flipped, I was super confident. I had some more positions around this area. I'm not wait for the structure shift. Nothing. Once it's getting flipped, I was super confident. I had some more positions. Keep my stop at this point, and it got displaced. Again, come back and approaches this point and around this level. I had some more position in different accounts, and I'm not closing. I kept my target around this point, but there is a equal highs. There's a equal highs here. A lot of fair value gaps. Beautiful sell model. So I'm not confident enough to hold the trade towards these highs. So I just since I was down -1% in every one of my accounts, I was not that confident to hold this trade. I should hold at this point. If I hold the my price at this point, this should be my exact target. But I want to see at least this area. So this area, right? So I keep my target at this point, right? So there is no prices approaches this point. There was no movement towards the side. Price reach all the way up to this area. This firewall gap getting respected, holding the price, keep on holding the price. Just consolidating here. I closed my profit somewhere around this point, around this area. Once this area getting met, I closed. The reason why I'm not holding the trade, the major reason I was down. I was down 1%. That's the reason. That was not a good quality reason. Though You can see one thing. There was a farewell gap in high frame, I guess. So structure shift to the downside, leave the farewell gap, remain unfilled. So most of the time, this farewell gap holding the price gives some sort of pullback or something like that. So inside the farewell gap, I just close the machine. Inside this farewell gap, I take my partials. After approaching this point, I take off some partials. After reaching this area, exactly at this breaker point, I close my position. I don't willing to go hold the trade. So most of the time, this kind of area, this firewall gaps are this not this firewall gap, this area. This area aligned with this firewall gap is very dangerous for us to hold the position. Most probably it's going to hold the trade or just give some pullback, some to the or get reverse. That's a lot of things might happen. So I don't want to get stopped out. So I just close my position, beautiful profits today. So first position here and my second position exactly. Sorry. At this point, okay, stop loss. The only thing that I did wrong was in this impatient entry. Second thing is my take profit is not the current to risk reward ratio is not 1:2. It was just 1:1.2 or 3. It's just 1:1 because my stop loss was very big. According to this model, I need to keep my stop at this area. I can keep my stop below this fair value gap. But since there's a two fair value gaps, I don't like to put stop loss in this area. So I kept my stop around this point, which skyrocketed my risk. I don't like that. I almost risk 1.2 or 3% in this trade. If it got reversed, I'm gonna be already down 1% or maybe down 2%. So it was not that wise action that I was taken today. That's it. Beautiful entry, beautiful price action, beautifully placed, and the price where it exactly stopped around this point. Yep. Around this point. Yeah. Um, exactly at the London high. You can see, right? You can clearly see this, right? So exactly at the London high price, keep on holding. So so you always need to concern about the London high, London lows, Asian high, Asian lows, New York high, New York lows. Most of the time, those things are very important. London low has been taken. Once the price sweep the yesterday's low, give structure shift, greater parallel gap, holding the price all the way up to the London high. London high align with the breaker, align with the fair value gap. Price keep on holding. So you should target London high. Not always, most of the time. You should concern about that. You should have some um, ideology or thought about the London highs and lows, those kind of things. If I confident enough to hold my train at this point, I am chopped out today. I might I probably got chopped out here and might lost a lot of my profits, right? So it was not a good idea. Even though my 2 to 2.5 ratio is here, I don't need to hold the trade through those fair value gaps because in 15 minutes you can clearly see the fair value gaps. This is a beautiful bearish fair value gap. So it might get reversed. It might hold the price towards the entry point or towards the equilibrium level. I don't want to see that. All I want to see just take some profits off inside these fair value gaps. That's going to be good entry. Like high, low, swept, success shift. It might give a 50% retracement, whatever it is. I don't like to see that those kind of things, but still it's a good entry. That's it. Bye for now.